Hello everyone, it's Henry on the live stream. I appreciate you all for tuning in. I hope everyone can hear me and can see my screen very clearly. If you cannot hear me or cannot see my screen very clearly, please indicate so that I can have that fixed before we commence. See my screen very clearly, please indicate so that I can have that fixed. So in this live stream, we're going to look at what the market is doing so far on Aussie, the point of interest that I outlined already on Aussie. Thank you so much for your confirmation. So on Aussie, I said if the market is going to go to the downside, then this inefficiency right here will potentially be the catalyst to send price to the downside into this discount zone. So this is a weekly discount zone, and as you can see right there, if you use the Fibonacci from the low to the high, you can see the equilibrium is resting right here. Anything below the equilibrium is discount, and right here we also have an inefficiency resting below the equilibrium, which is inside the discount zone. And if you look at it on the daily time frame, you can also see we have an inefficiency resting right there as well. Now we have a high and a low on the daily swing high, swing low that got broken. So what we're anticipating to see is whether price is going to use the bodies of the candle or it's going to run the liquidity before a potential reversal. So right here, as you can see so far, price came to the downside, mitigating the bodies of the candle. We had this rejection to the upside, but it failed to rally above the high, which eventually dropped to the downside, running the lows, showing us telltale sign there's a potential tendency for price to drop even lower to the downside to mitigate this key level. Now if we go to the 4-hour time frame, as you can see on the 4-hour time frame as well, on the 4-hour time frame we also have this low resistance liquidities resting right here. I'm going to outline that so you can see it as well. So right here we'll have a low resistance liquidity. So if for any reason price wants to go to the downside, this will be an easy target for the market to gravitate to run out every sell side liquidity resting right here. So I wouldn't really be surprised the CPI news is going to be out in 2 hours. And once we see the news come out, we're going to see what the impact is going to be on the marketplace, whether it's going to continue to take us to the upside or whether it's going to run sell side liquidity. In my opinion, this would be a perfect area for me to anticipate to see the market gravitate to. So if I want to look for a buy, I'll be buying below the sell side liquidity and also within the discount position resting right here. So this is what I'm watching on Aussie. If this plays out, it will be a very beautiful trade, because if we do eventually get into a buy from this key level, taking it to run the buy side liquidities, that's around 2.45% move to the upside, which is going to be very phenomenal, and we can potentially even target this inefficiency resting right here. And if we're targeting that inefficiency on the weekly, that would be about 2.7% move to the upside. And also don't forget that we still have this low resistance liquidities resting right here. So price coming up here, it doesn't really mean that once we're there, it's game over. We're still anticipating for a run on the buy side liquidity eventually. So that being said, we're going to be looking at Euro US dollar to see what Euro is doing as well so far. So before the news, as you can see, most of these pairs have been trending to the upside. Even Euro going to the upside, despite the fact that the key level I want to buy from is really very close to that key level, but it didn't mitigate it, and now we're trending to the upside. So personally, I'm not going to engage. I'm not going to try to chase the market. And the only thing I'm going to be watching is key levels that could potentially facilitate a reversal in the marketplace. And I'm not going to trade off those key levels as well. And this inefficiency here is one key level I'm watching. So it's either here or this gap right here. So price will potentially either mitigate this inefficiency or this gap either before or after the news. I wouldn't be surprised to see the mitigation here if we're going to go to the downside to mitigate that extreme discount zone. So both trades on Aussie and Euro are really high probability setups, and I'm watching them very closely. each and every one of them is going to deliver phenomenal results if it plays out. Looking at euro US dollar from this key level to this low resistance high is literally 1.8% move to the upside, which is absolutely incredible. If we can catch that move from the smaller time frame, that could potentially deliver between a 1:7 to a 1:10. And if we're even targeting the weekly high recent right here, which I talked about yesterday, if we're targeting this weekly high, it's going to be a potential 2.5% move to the upside, which can still easily make us a 10% move on this one. So I will be watching this too as well. I said in this live stream, I'm also going to be talking about my analysis on Ethereum and what I'm anticipating to see. So far, the key level I outlined weeks back on Ethereum, and I said this is the perfect area for me to look for a buy on Ethereum. You can see how price has nicely been coming closer and closer to that key level. Every single day, the market is drawing closer to that point of interest. It's very close, but it hasn't mitigated the key level. So all we do now is to wait. If we're using our Fibonacci from the high to the low, this key level is our equilibrium. Anything below it is discount. And as you can see, price is very close to that discount zone, but it hasn't mitigated the discount. This right here is equilibrium, so anything below it is discount. And price has come very close to the equilibrium, but it didn't tap in, and then we saw this up move mitigating this inefficiency. So I wouldn't really be surprised to see a rejection of that key level to take price into the discount zones. Once we're in the discount zone, what I'm going to do is I'll be watching this key level, because this is the last down close candle before the expansion that broke this 4-hour high. So if I do see price eventually come down in here mitigating it, I'll be looking out to see a 15-minute shift in market structure to the upside. The 15-minute shift in market structure into the upside, once I see that in the marketplace, I'll be looking for my first entry. And then after that, I'll also be looking for a re-entry as well, which will be on the 3 minutes time frame. So hopefully both trades are going to produce phenomenal results. Buying from this key level, my take profit position is going to be the all-time high from here. I want to see Ethereum hit an all-time high from this key level, and I wouldn't really be expecting that to happen in months or years. I'll be expecting that to happen within days or maximum a week or two after mitigating and the market finding a support zone within this key level. Once that support zone, the market finds that support zone, the next thing will be for an expansion to the upside to run this low resistance liquidity resistance right here. So this would be my overall target on Ethereum. If I'm looking for a buy in here, my take profit position will be in here. I still anticipate for Ethereum to go higher, but this is a trade setup, and when I'm trading, I'm having realistic targets where price can easily smash. So I place my take profit there, and I can allow it to do its thing. So whenever I hit the take profit, awesome. So that is my analysis on Ethereum and what I'm watching closely. In the next few hours now, the CPI numbers is going to drop, and we'll be watching to see the impact it's going to have in the marketplace. So hopefully, if it does have positive impact in the marketplace, then I'll anticipate to see price dive into this key level and then look for a potential buys to the upside. So right here will be my first take profit position, low resistance liquidity. I wouldn't be surprised to see here to be the next run after mitigating this key level. So that is my analysis on Ethereum and what I'm looking forward to see in the marketplace. The next one we're going to look at is Bitcoin as well. We're going to look at Bitcoin, what Bitcoin is doing, key levels we're anticipating to see Bitcoin come into. Looking at Bitcoin on the daily time frame, you can see it's very easy to read. We'll have a high, we'll have a low, we'll have a break of structure, and right here we're having an inefficiency. So if I want to buy Bitcoin, inside this inefficiency is my perfect zone. Perfect buy zone. If price should come in there, that'll be an awesome trade setup. And then right here would be my first take profit position, and then this low resistance liquidity will be my second take profit position. But for me, I'm more inclined to buy Ethereum than to buy Bitcoin, because in my opinion, Ethereum has more potential to rally to the upside. Because if we're looking at Ethereum against BTC, you can see that Ethereum against BTC, this is the chart, the daily chart, price created a higher low, broke structure. The next thing I want to see is a retest at this inefficiency. After mitigating this, the next thing I would love to see would be a potential expansion. And what And right here, if we're measuring from this low to this high, that's 30%. So once price is in this inefficiency and we do see an expansion from there, I'll be anticipating to see another 30% move to the upside minimum. It can do more than that. It can do 40%. It can do, at least it's going to do a 30% move to the upside. That would be my target. And right here is the target I'm talking about. So once price hit that key level, that will be a potential area for me to start scaling out profits as well on my Ethereum trade. So right there, and then as well, look at what's resting right there. Inefficiency. You can see how the quantitative analysis aligns with the technical analysis. This is how you know a high probability setup. When you see the quantitative analysis aligning perfectly with technical analysis, this is when you place a trade and you hold that trade. If we do see a rejection of this key level, once price mitigates it, this would be a perfect area for take profit position. Now, looking at all these highs as well, you can see low resistance liquidity, low resistance liquidity, low resistance liquidity. So I wouldn't even be surprised this low resistance liquidities, I wouldn't be surprised to see them all taken out, because if we're looking at it from here to the overall high, that 72% move to the upside, and I wouldn't really be surprised to see an expansion on Ethereum to blast through this high. So this is what I'm watching on Ethereum, my analysis. If you do have any questions, feel free to drop in the chat. You can see how I've done the analysis on Ethereum, analysis on Bitcoin, and also an analysis on Ethereum against Bitcoin, for you to understand which one is the stronger pair, which one could potentially deliver more profit between Ethereum and Bitcoin. And right here you can see clear as day, Ethereum will produce more profit than Bitcoin in the long run. So that is my analysis. If you do have any questions, feel free to drop it in the chat. The last but not the least, before I wrap up, it's going to be the indices. I said I'm going to talk about my analysis on NASDAQ. So for NASDAQ, I still remain very bullish on NASDAQ. I still want to see a potential continuation to the upside. If we're looking at the daily time frame, even though we're consistently hitting all-time highs, it's very difficult to trade when we're consistently hitting an all-time high. But in this case, you can see how I trade when price is hitting an all-time high. The first thing I do, I derive my overall high and low, break of structure, and then this right here was the last down close candle, took liquidity, broke structure. That is why it's my key level for buy setup. Price mitigates it. I'll be anticipating to see a 30 minutes high get broken. Now we go to 30 minutes swing high, get broken. So let's see 30 minutes. This is our overall swing high, swing low on 30 minutes time frame, and this right here is a break of structure. Now I start to scale down, going to 1 hour time frame, looking for inefficiencies, liquidities, and right here I have an inefficiency, I have liquidity. So if for any reason, maybe due to the high impact news or whatever reason, I see price coming here, I'll be looking for a 5-minute shift to market structure. Once I see a 5-minute shift to market structure like this, then I'll be looking for a retest. That retest, once price is retesting, I'll go to 2 minutes time frame to look for a shift to market structure. Once I see a 2-minute shift to market structure, then I'll be looking for an entry. I'll use the high as my entry position, and I'll be targeting the overall newly created high right there. I'm not going to try to put my take profit at unrealistic levels, because I don't really know what's resting above this key level. Price has never been there before, so I'm never going to use anything above the current price action as a take profit position. So I'll use what I'm seeing already as a take profit zone. So this is what I'm watching on NASDAQ. If you do have any questions, feel free to drop it in the chat. I appreciate every single one of you for tuning in, and I'll talk to you all next time. Have an amazing day, everyone.